Well, these are the kind of articles that I'm not going to say enjoy. I really don't enjoy any of this bad data. Good data for bad reasons. Gloom and doom, if you will, of the data. But the data is the data. What it is, can't help it. But I really like this kind of data. It's chart based. It's this happened before, and we can see there's 2 times it happened before, and the last 2 times this happened, such and such took place. That's the kind of data I absolutely eat up. And I've done a few videos recently of just such that thing. Last time this happened, market crashed. Last time this happened was 2000, tech bubble burst, 2008, etc. Zero Hedge has another one, extremely, a pretty short article. Not that that matters. I'm gonna blast right through this for you. And this comes from Bank of America. Bank of America. Previously, this has only happened in the year 2000 and 2008. Tech bubble burst, 2000, market crash, and 2008, the last big recession, which you could also say a market crash because that's what happened too. Although it will not come as a surprise to regular readers or viewers of Jason 4 that for various reasons, loan growth in the U.S. has not only ground to a halt, but for the all-important commercial and industrial segment has dropped at the fastest rate since the financial crisis of '08. Some, until recently, economic optimists, opium smokers, if you will, such as Bank of America's Ethan Harris, are only now starting to realize that the post-election recovery was a mirage. A quick recap of where loan creation stood in the last week. According to the Fed's H.8 statement, things continued to deteriorate, and C&I loans rose just 2.8% year over year, the worst reading since the start of the decade, and on pace to print a negative number traditionally associated only with recessions within the next 4 weeks. While total loans and leases rose by just 3.8% in the last week of March, less than half the stable 8% growth rate observed for much of 2014 and 2015. Yet while Zero Hedge readers have been familiar with this chart for months, it appears that to have been a surprise, that may have been a surprise of Bank of America's chief economist. So Zero Hedge, of course, says, yet while Zero Hedge readers have been familiar with this chart for months, it appears to have been a surprise to Bank of America's chief economist. One of these, another Bernanke or whoever. Couldn't see that one coming. Didn't see that one coming. However, in a report titled, "Is Soft the New Hard Data?" Ethan Harris confirms that he has finally observed the sharp swoon lower and is not at all happy by it. As he writes in his Friday weekly recap note, this week saw some softness in hard data as auto sales and jobs growth declined sharply. While 2 observations do not make a trend, this occurrence, nevertheless, is noteworthy as, on the one hand, very positive sentiment indicators suggest activity should pick up. Yeah, listen, about that hard data versus soft data. Not sure what you might be expecting to pick up is going to pick up, unless you're talking about this bad data. In that case, yes. While on the other hand, loan data suggests everybody is in wait-and-see mode, pending details of fiscal stimulus equals tax reform, which highlights the risk of softer, hard economic data, he said. A frustrated Harris then admits that such a sharp and protracted decline in loan creation has only happened twice before. When was that? As I said in the beginning, the year 2000 and 2008 recessions. And you know what they say? Oh, they're about 7 to 8 years apart. They're usually 7 to 8 years apart. Usually 7, right? Well, and it was at the end of 08, 9, 10, 11, 12, 13, 14, 15. Again, it kind of happened in 2009, really. 2017 or 16. That's 8 years. 7 to 8. But we're now in 2017. What does that mean? We're overdue, folks. We're overdue. Big time. And if we weren't overdue, there's not a chance in hell I'd be able to come out here and show this data and put it in front of your face. Last time this happened was this. Last time we saw numbers like this happened. Last time, again, which they even have the positive spin. The last time consumer confidence was this high was just prior to the 2008 crash. You don't say. The last time we had an all-time high stock market was before the 2008 crash. Which I think one of them, I don't remember if it was the Dow or whatever, 2008, whatever, 7, whatever. One of them was like at the absolute peak of its time. Regardless, a year later it hit. And he says that, which he's just looking at some charts, right? But he says the first period of no growth for at least 6 months since 2008 to 2011, aftermath of the financial crisis, and prior to that, after the early 2000s. And just to look at this, we can end this video at this point. For the first period of no growth for at least 6 months. We have it here. We have it here. We all know what happened there. And we have it here again. And notice it started in 2016 right here. Started in 2016 where this, it began to fall off right here. And then we have, again, what we'll call the nonsense Trump train. He wins the election and markets rally big time. It was nonsense. It would have been here. The circle would have been slightly over, to the left. Point being, though, this year, next year, will we get past this year to get to next year before all hell breaks loose in the economies of the world? I can't say possibly or positively one way or the other. And I think anyone who does is foolish anyways, because you've seen how long they can drag this stuff on. However, the bad data is pouring in out of control, like someone is dumping, atmospheric rivers. I'll use a WebBot term. Like dumping atmospheric rivers on your freaking head. That's how fast this bad data is coming in. So how are we going to go too many more years? This year, I feel like I've said this before, end of this year, September, October timeframe, which is typical, if we can even get that far, I think there'll just be too much, and they may have to let loose, which will bring us into 2018, where it's going to be terrible, if it goes this way anyways. And then I'll be coming out here screaming, hey, about that Economist 1988 magazine cover that said get ready for a new world currency in 2018. It had paper dollars of all the countries of the world burning with the phoenix rising from the ashes. Just a coincidence, I'm sure, to call that 30 years. It happens to be a Rothschild-owned, or part owners anyways, company. Coincidence. Nothing to see here. Anyways, take care. Got one more video for you.